Hey everybody, this is John. Welcome to the free video. And the main thing I'm watching continues to be the transportation index, with the idea here that we have a weekly squeeze with the A wave below zero, the B wave below zero. All right, but the C wave is still above zero. So you have the short and intermediate term trend to the downside confirmed, but the longer term trend is still to the upside. Now, if a market's going to roll over, obviously these things have to turn first. And at this point, we have a descending wedge pattern, which is bearish, and we have a squeeze setting up. So I just keep watching this, and I've watched this, test this multiple times, but the danger to this market, in my mind, is that this actually is going to go, and it's going to bring the rest of the markets down. Now, not necessarily kicking and screaming, because there are other sectors out there that are strong, notably financials are acting great. Okay, so when you have something like this where, say, the transportation sector looks really bad, but like the financials look really good, it really just results in kind of a sideways market. And I consider kind of quote unquote the market as the spiders. And you know, I've been watching the squeeze, and there's nothing to do here but really be long, but to like have long type positions. But I think we just want to be long here with the idea that this may be short-lived. Maybe we pop up here and die. And just have a little bit of caution towards it, okay? And it goes back to a theme that I just kind of keep hammering over and over again, is that for me personally, I would rather be long just really strong stocks that really don't care what the market is doing, okay? AMBA is an example of that. Netflix is an example of that. And as we're looking at these, you know, right now, it's kind of like, all right, those two are great. They're looking a little extended, but those are the kind of stocks that I would want to buy on pullbacks, right? Another one I've been watching here too. Let me see if it's getting its act together here. Is AutoZone. So this is a big stock. The options are kind of tough to buy. You almost have to always do debit spreads, but it's another one that is essentially not really caring what the market thinks, okay? And then the other thing to keep in mind too in this kind of market is just to kind of be thinking of things like short exposure. So Federal Express here is part of the transportation sector, but you can see Federal Express is actually doing really well. So, you know, are there stocks that are part of the transportation sector that aren't doing well? Well, yes, there are. I mean, you know, rails and stuff like that are not doing well. So this is just a very much a, you know, if you think of this market, just think of it in terms of kind of sector by sector. And then the other danger here to the market is that the energy sector, which of course is the largest by market capitalization, is also rolling over again, okay? So the strategies that I like in this market are simply I'm just pretty much looking at, you know, the stuff that worked in 2014 isn't going to be the same stuff that works this year in terms of, okay, the NASDAQ's higher, so it doesn't matter what NASDAQ stock you buy, et cetera, et cetera, et cetera. We just have to build positions a little bit more defensively. You don't want to be in this kind of a market. You don't want to wake up and have the NASDAQ down 80 points and all your positions are long, okay? All right, so let's see if I can find an example here of a trade that I like right now. In terms of a stock that just kind of has its act together, in all cylinders firing here. I mean, you got the A, the B, the C wave above zero on the weekly and the daily, and we've got a new daily squeeze setting up here. So that's the kind of charts that I like in this market. And to the downside, it's interesting right here because Walmart's really having a tough time. And you can see we had this ever since this weekly squeeze triggered. It's just kind of pushed, ironically, after this record run here, not that Walmart's falling apart or is in danger of going out of business, but right now you're going to have momentum. Like people who piled in here are going to start getting stop losses, and that actually should push us fairly quickly down to the fire line. So I do like that to the downside. All right. So that's what we got in the premium video. We've got a lot to cover in terms of the bigger asset classes, you know, like gold and the dollar index and stuff like that. And so we'll dive into that. But otherwise, the main thing that I would look at for the rest of this week is that to the upside here, you know, on the spiders off of a daily chart, it's completely fine to buy new highs. You know, you buy new highs until it stops working. just keep an eye on XLE, which is energy, and the transports, because if those go, at the very least, look for a pullback to the 21 EMA here. And I think that the main thing to keep in mind here is that this market's extended. It's two things. Not only is it extended, okay, but through most of 2015, it really has not strayed too far from the mean. If we go one ATR away from the mean, it comes back. If we go one ATR away from the mean to the downside, it comes back. All right. Oh, it goes up, comes back. And at this point, we're just kind of, this market tends to revert to the mean. So I wouldn't really focus on too many new longs right here, but I would be looking at being a buyer on a reversion to the mean. So at this point, you can err on the side of selling call credit spreads and things like that. All right. Going to dive into the premium video. You guys have a good rest of the trading day, and we'll see you at the next update.